Good morning friends, welcome to The Point. In today's video we will discuss about an agency that was planned to launch by RBI in year around 2016 and 17 with the view to absorb NPAs of the public sector banks. So we'll start with the today's video as to what PARA is all about. Public Sector Asset Rehabilitation Agency, also known as PARA, also called as Bad Bank, is a proposed agency to assume the non-performing assets of our public sector banks in India and to deal with the recovery of bad loans. So again, I would like to take you to the time of 2016-17, where the amount of NPAs mentioned in the public sector banks account were all-time high. So in 2016-17, the total advances made by just the public sector banks were hovering around somewhere 51 lakh crores, and out of this around 5 lakh crores was converted into or turned down into NPA, so which was a very problematic and gruesome situation for the economy. So in order to resolve this problem, asset reconstruction company was planned to establish, which would just deal with the NPAs of the public sector banks, and the agency would be named as Public Sector Asset Rehabilitation Agency. So this agency will just deal with the NPAs of public sector banks and not the private ones. Moving on to the next slide, which talks about what was the need to introduce such a bad bank, because the NPAs were at its all-time high in 2016 and 17, and there was a need to have a mechanism that can solve this problem. So this was introduced. Next is stress assets of banks are making it difficult for new lending since the amount gets blocked in the accounts of defaulter. It was a difficult situation for the banks as they were not able to create or grant more loans in the market. Next is as bad debts kept rising, it raises the cost of the government to finance the PSB. So there is a limit to the government to which they can finance or capitalize the public sector banks, because whatever or whichever amount the banks were being capitalized, most of them was going into vain as they were getting converted to NPAs. So that was raising the cost of the government to finance the public sector banks. Next is high NPAs force banks to keep their lending rates high to boost their profits, because most of the money was going or getting converted into NPAs. So banks were lending, but they were lending at a very high rate of interest in order to cover the margins. So all this led to the establishment of a bad bank, or a need for a bad bank which could absorb the NPAs of public sector banks. The last slide talks about how the PARA would work. So it is like a centralized agency which would absorb all the NPAs of public sector banks and then put it to resolution. So it could solve the coordination problem since the debt would be centralized in one agency. Next is it could be set up with proper incentives by giving it an explicit mandate to maximize the recoveries with a defined time. So if the PARA is successful in solving the problem, so it would be given incentives to solve it. Also, it is just not about maximizing the recovery, it is maximizing the recovery in a well-defined time. Next is it would separate the loan resolution process from the concern about the bank capital. Now the loan resolution process will be taken care of by the bad bank, and the banks can focus on its core operation, and they are needless to worry about how the money would be recovered. Next is once the loans are off the books of public sector banks, the government would recapitalize them, thereby restoring them to financial health. So once the money is recovered, they could be again lent to the new people in the market and leading to new credit generation in the economy. Last is similarly, once the financial viability of the over-indebted enterprise is restored, they would be able to focus on their operations rather than their finances. So it is just not that the PARA would just give the financial assistance or help in resolving the loan process. They would also help them with the technical assistance, which would increase their viability in the business operations. So this is how the PARA would work, and the reason I have explained it well, it's just an asset reconstruction company by the name of this PARA. So nothing is different, and this ARC which is gonna be established will just deal with the bad loans or the NPAs of public sector banks only. So friends, this is all I wanted to discuss regarding this agency, and this is all for the today's video. Thank you so much for your patience listening.